You've worked with over 17,000 brands. I think it's very interesting that you invest in both the app side and the brand side.
For everyone, for frame of reference, like we threw a party in New York City around when Shopify hit 250,000 stores, like that on a meetup. Like that was the big thing back then.
I actually reached out to you, I think it was a couple months ago, to get you on the podcast. And you said, no, I can't talk. I'm in the middle of an acquisition. Yeah.
And now we're here.
Now we're here.
After a decade plus of scaling the fastest growing Shopify Plus brands and apps, Jeremy Horowitz launched his own private equity fund where he acquires Shopify apps and $10 to $100 million brands. He's worked with 17,500 plus e-commerce brands grow and become more profitable.
I actually think Shopify wants more of that, like what I'll call big SMB, but lower mid-market brand to stay on advanced. I think they're actually easier to serve customers that don't need or expect as much. 70% of Shopify's revenue and 60% of their gross profits come from payment processing. But even stores that are that scaled, what was most interesting to me is how few apps they actually use. And what I mean by that is, hey, marketing is insanely low. Let's go put in some paid media experts, blow out marketing. Yes, the percentages might come down, but if we can get the dollar amounts up, that solves our need. You know, something that makes it truly unique. To me, it's what are you doing that someone cannot or will not? The second piece is like,
Jeremy, this is long overdue. Thank you so much for coming on the show. I am an avid follower on LinkedIn. I read all your content and following you for a while. And I can't believe this is the first time I've seen you in three-dimensional moving. So thanks for coming. Can you give us a quick, it's so much on my list to talk about today, but quick little background. Tell us a little bit about you, who you are, and your journey of like how you got to where you are today.
Yeah, thanks for having me. I am really shocked we've never met in person because over a decade ago, I was actually a bold customer of kind of the original suite of apps. So it's crazy we've never met in person.
Yeah.
But it's one of these, it's what I love about this space. You can be a digital friend for forever.
Right.
And eventually meet someone. Yeah. So quick background on myself. I got into the space building Magento connections back in the day. Very early found this thing called Shopify. I was working at a dev agency where we were basically migrating WooCommerce sites over to Shopify very, very early. And for everyone's frame of reference, like we threw a party in New York City around when Shopify hit 250,000 stores, like that on a meetup. Like that was the big thing back then.
Yeah.
Which I know, Jay, you way predate that because you were an original store, like first 10,000, right?
Yeah, 6,000 in 2009. And it was, the original, like, it was very, very, very basic. Like the original Shopify admin had like 5 buttons up across the top, and it was nothing like it was today. There was 20 apps in the App Store when I put my first store on Shopify. So.
Yeah, which is crazy. There are now 3 million stores and over 11,000 apps, which is just crazy to see that evolution. But yeah, from back then, I basically went to the brand side. I managed Shopify Plus, Amazon, mostly e-commerce for a bunch of high growth brands then, the most notable one being Lumi, which was Kim Kardashian's favorite selfie case, phone case, bright lights on it, take photos of yourself, friends, food, that kind of thing. Back on social media and Instagram, we're going vertical. Did that for a couple of years, also worked for an automotive aftermarkets business where I met my partner and now our private equity fund. Scaled that from 6 to 8 figures, built some SaaS, basically solving that brand's problem, spun it out. All 3 businesses exit late 2018, 2019. At that time, I go to work for a couple of Shopify apps, most notably being Gorgeous. We start doing some early stage checks and then looking to get back into private equity and acquiring brands and SaaS. About a year ago, I leave Gorgeous to go build what we're now working on Because Ventures full time, which is a private equity fund focusing on acquiring Shopify brands and Shopify apps. Really anything in e-commerce, but 90% of e-commerce. Shopify at this point. Where we do that now, we recently acquired a Shopify app earlier this year called Coco AI, which is WhatsApp marketing for Shopify brands. And we're still on the hunt for our, what we call our platform brand, or that big brand that we're going to grow and scale. And in that meantime, I've decided to post what I think are helpful comments on LinkedIn every day. You can debate and argue whether they are or not. But and then just I've been meeting a bunch of great partners and working with awesome people like yourself.
Oh, awesome. Well, thank you. I mean, it's such great context. And I don't know if you mentioned it, but I know this, like you've worked with, just for context here for listeners, over 17,000 brands. I think it's very interesting that you invest in both the app side, like the tools, and the brand side. That's, I think, pretty unique. There might be a couple other people, like I think Nick Sharma does that a little bit. He's more on the brand side. but I think there's a few others in the space that do that. So I'm really excited to hear your perspective on things. And Coco AI, I definitely want to get into as well too. I know that was so I actually reached out to you, I think it was a couple months ago, to get you on the podcast. You said, no, I can't talk. I'm in the middle of an acquisition. Yeah. Pause everything for a month until this is done, and then we can talk. So excited to hear.
It was literally during our embargo. Like, it was literally during the 2 or 3 weeks we were closing documents. Well, and I was like, I'm happy to talk about it. I just need a couple of weeks.
And good on you for having the I don't know, I guess like the wisdom to know, like, distractions are everywhere. There's just so much going on, and like focusing on what needs to get done at what time and prioritizing. And anyone that doesn't respect that, I think, is not someone you want in your life anyway. So I thought that was awesome that you said, nope, check back in 3 weeks. I'm doing this. And I respect that. So
thank you.
Yeah.
And now we're here. Very excited.
Now we're here. So I've got a lot of notes here, a lot of ways these conversations can go. But the first one I want to dive into is you post a lot about Shopify apps. Mm-hmm. And I think the content you put out is fantastic. We've circulated it a lot of times within Bold. We see one of your posts or report, and it's not just the listings of like top 10, it's often the insights behind them and the color that you share on things that I find quite interesting. So first of all, anyone listening, if you want to get kind of good insight on what's happening in the app space, follow Jeremy I see it on LinkedIn. Do you post the same stuff on Twitter? I just don't, or X. I'm not on there as much, but
I'm much more active on LinkedIn.
Okay. So I would say go to LinkedIn. Then you just don't get the anger of going on X and everything else that comes
That's the other reason I like LinkedIn more.
Yeah. Okay. If I'm feeling like fighting, I go on X, and I just see a whole bunch of posts of people I don't follow that just gets you angry. So anyways, but LinkedIn is still good. So let's dive into this. So you've worked with brands, you've been on the app side, you're now acquiring apps. Let's talk about let's start with like Shopify, the larger Shopify brands, Shopify Plus brands. Like, what are some of the big shifts you're seeing in tech stacks of, let's say, 1 million and up brands right now?
Yeah, so that's a great question. Also, just something I want to dive in and clarify, because this has been really interesting in my evolution as well. So for anyone who isn't familiar, I basically do an annual report where I analyze the top 100 apps that the larger Shopify brands use. 2023, 2024, the first 2 years I started posting them publicly, I actually called them Shopify Plus, because I think everybody always associates Shopify Plus to the biggest Shopify brands. And while there's some truth to that, the really interesting thing that we found as we dug into the data more and more is 2 really interesting insights. The first one is the average revenue per year for a Shopify Plus brand is $2 million. Which is much smaller than, at least when I originally thought of, I think of Shopify Plus, I was under the 10, 50, $100 million brands are the biggest brands that, they have the great case studies when Harley goes on CNN and Fox Business and all those other places that they talk about. Yeah. But actually, when I looked at the data, 75% of brands on Shopify Plus are between 500,000 and $2.5 million in revenue a year. So it's actually much smaller brands than you would expect on Plus. The other interesting thing that we found was there are twice as many brands that just do above $1 million in revenue a year on Shopify. And that's an estimated number. So, it's not pinpoint accurate, but it's pretty directionally. I QA'd the data a lot. It's directionally accurate, not literally accurate. But around 100, there's about roughly 40 to 50,000 stores on Plus. There are 103,000 stores that are doing over $1 million a year on Shopify. And so what's really interesting is, and I have a whole bunch of conspiracy theories if you want to go down this rabbit hole.
I do. The reason I do want to go down this rabbit hole is someone actually emailed me the other day, one of our listeners, and they said, Jay, I would love to hear an episode just about Shopify Plus, why to pick Plus, when not to pick Plus, when it makes sense, they literally said, do a whole episode just talking about Plus. And I don't want to do this whole episode about that, but I'd love to hear this rabbit hole. So
yeah, I'll give you the short clip that you can mix in a bunch of experts, and hopefully you find people smarter than me to do the other segments. Okay, so the quick thing on Plus, I think from talking with 100, probably 200 merchants about this today, basically everyone who decides to upgrade to Plus, unless you're truly a big brand, like if you are 20 million and up, I think that's 100% of those brands are on Plus. Yeah. But everybody sub 20 million, which is actually the majority of brands on Plus, and probably the majority of people who ask that question, usually the 3 use cases I hear of why to upgrade to Plus One is is like 80% of the reason is you want to save on payment processing, which is where my whole conspiracy theory comes from, because it's very interesting. Usually Shopify will give you significant discounts on your payment processing fees. So right, if you expect to do a lot more revenue, you can bring those fees down. The math should work out that it's a great savings for you with all of the other adjusted costs. The two is internationalization. So, if you're expanding from North America to Europe, or APAC and Australia, APAC and Asia, and you need the US store, UK store, French store, German store. It's a really elegant solution versus, back in our day when you just literally had to set up 7 different Shopify instances and had 7 different accounts. And it was I had to do that. It was a real nightmare. And then the third one is you have a complex ops tech stack. So you need an integration with something like an ERP, or you have something super custom on the back end where you just kind of need to like break open the backside of Shopify. And you can't do that on a regular plan. But those are the 3 most common use cases. Honestly, though, like 80% of it is just you want to save on the payment processing fees.
Yeah. And I think actually Shopify triggers an email when you hit a certain threshold. I've seen it where it says you should consider Plus because you might save money on processing fees. And like that is the value proposition. Like it's save money by switching to Plus, which there's probably different opinions on that.
Yeah. Okay. So here's my conspiracy theory. I actually think Shopify wants more of that, like what I'll call big SMB, but lower mid-market brand to stay on advanced and to stay on the top plan. And here's why. I think they're actually easier to serve customers that don't need or expect as much, right? You don't have they don't really have MSMs anymore, but you don't have all the servicing costs of them. And Shopify actually captures a higher, let me take a step back. 70% of Shopify's revenue and 60% of their gross profits come from payment processing and what they call merchant services, which almost all of that is payment processing now that they don't have fulfillment. So, right. Shopify is essentially a payment processing business that has some software on the front end that, is very profitable, is great, offering great service, but really their business is the payment processing. And that advanced, I think there's actually like a real business value to capturing the 3% or 2.9% plus 30 cents for brands doing 1 to 10 million and keeping them on advanced where it's a little bit of an easier plan. So you're actually getting more payment processing and a lower cost of service to Shopify. And so I think it's a really interesting, like, we can get into like my whole thing of how I think Shopify is going to be $1 trillion business of like, where does Plus really live in the future? Because it's essentially just like a very sophisticated enterprise fee plan for small brands that maybe don't need all of the feature set versus like a true enterprise offering that, is going to go grab the mid-market enterprise brands and bring them over from a Salesforce Commerce Cloud, or Magento doesn't exist anymore, but custom carts is going to be the other major new source of business for Shopify.
Yeah.
And so I think it's really interesting of like, I have this whole like conspiracy theory, like, does Shopify even want people to upgrade to Shopify Plus anymore? Because like it may make them more money to keep them on advanced.
Yeah. I wonder if they're stickier though, if they're on Plus. Well, yeah, interesting.
You probably just an annual contract.
You do. You sign it. You sign 1 year or 3 year.
Yeah.
So it's a little bit. Yeah.
But then they got to pay salespeople to sell that. They got to pay the service people to service it. So they don't break out their data on their financial reports to that level. But I do have a guess that it is actually more profitable for them to not do it for the sub $20 million brand.
Yeah, I would bet you're right for sure. One question that goes through my mind, and I know they do actually have a plan above Plus. They call it Platinum. We see merchants, like when someone installs one of our apps, we get the plan details and we see Platinum. There's actually about 50 different plans. They've all been, because they changed their plan names, and then there's staff plans, there's grandfathered plans, there's, oh my goodness, like then they have like all their affiliate plans. So there's like with Rogers, there's different plans with Africa, which is like an agency. Anyways, there's all these literally in the back end. We have to parse it all for our analytics. Yeah. And there's about
a matrix of all these different.
There's literally about 8 different plans that are Plus. There's one that used to be specifically for, I don't know if they still have it or not, but it was for like celebrity plans, and they called it. I think it might have been VIP or something. They gave it a different name that was basically, there's a lot of celebrity brands, and like Kim Kardashian obviously makes a lot of money, but the celebrity brands that are like maybe musicians or they're on TV and they have a t-shirt clothing line. that actually doesn't do much money at all, but it's more like they are a celebrity and they have a brand. They don't want to put them on a basic plan. They want to give them better treatment.
Yeah.
Even though they're really not selling much, they're selling more. Like Bon Jovi would be an example. Like he's got a merch store, doesn't do millions of dollars a month, but it's his merch store, right? Like, so I thought for a while that I think they do, they just don't promote it, but like to have a proper plan above Plus that is like true enterprise, where they actually are on site with merchants and actually acting on their behalf, helping them make decisions. And I know they do this because we have people on our team that have been at Shopify, and they talk about like, oh yeah, I actually flew to Gymshark and I spent a week in their office helping them launch their launch, and they were on the Shopify Plus team. And I know they don't do that for every Shopify Plus merchant.
Yeah.
So there's definitely different levels of Plus treatment, but I don't think it's explicitly like stated at X amount, or it's kind of maybe just a hand-picked thing.
Yeah. And my guess is that, I mean, they kind of called the commerce components for a little bit. Like my guess is figuring out that problem is going to be the next massive swing in their enterprise value. Like for Shopify stock price, figuring out what is their true like mid-market enterprise clear narrative plan, go-to-market strategy of, I think like the big wins recently have been like On Running and some of, I think LVMH's smaller brands, like, the like master luxury brands. Like, how do you get the rest of, we did another part of this article of like, how do you get the rest of LVMH's portfolio and like all, whatever it is, 300 billion in sales that they're doing.
Yeah. And
I think like they really like nailing that to me is what the next 10 years for Shopify is going to be about. Of just like, here's we won e-commerce basically in the SMB and lower mid-market. This is how everyone at a larger brand who isn't B2B, if you are a DTC, but if you're basically a consumer brand, you have to use Shopify because of X, Y, Z. And I think providing that clarity is going to become where the next like 200 to 500 billion dollars in their market cap comes from.
Yeah. Okay, let's talk this. I find this all like super fascinating. I think a lot of our listeners are probably fall in that advanced section. So before going too far down that, I know you've got a lot of insight and data on different categories of apps. What apps do you think are like, and we can talk about specific ones, or we can just talk categories, but like, let's take a store doing $1 million plus a year. Let's start with like, what shifts are you seeing in app usage, their tech stack, that those stores are using now versus 3 to 4 years ago? Like, what does some of that change look like that you're seeing?
So much of a simpler tech stack. I think 3 to 4 years ago, and even before that. And I think also like, so I really spent most of my time on the brand side, 2014, 2015 to 2019, 2020. I guess is when I officially made the switch from the brand side to the app side. And it was so much what's the app for that? How can I plug in a point solution to do the one thing that I need and kind of plug the holes of my site? And it was kind of the beauty of the early Shopify ecosystem of, Shopify had this great core, and then there was a ton of open area and surface area to fill in from an agency and a vendor perspective. The most interesting insight from this year's report and looking at kind of this segment globally, because if we think about it, there's 3 million Shopify stores overall on the entire platform, 103,000 that are over this million threshold. So that's 3%. I mean, we're talking about a very, very, very small segment of the overall population. But even stores that are that scale, what was most interesting to me is how few apps they actually use. And what I mean by that is we look at the market penetration. So if we sum up all the apps in every single category and we basically bucket every major category, email and SMS I've kind of just put into one big bucket today because a lot of people are, most platforms offer both, or most brands are using both, has 84% adoption. So 84% of the brands in this space use an email or an SMS tool. I'm sure some people know it's like, what are the other 16% doing?
That's where my mind went. Like, are the other 16% not using email, or are they just using something that isn't maybe a Shopify app?
So there are two qualifications. We remove all of Shopify native apps. So like any that Shopify produces, we do not include in the report. So if a brand is using Shopify email in theory, they could, the 16% in theory could be doing that.
Could be that.
or they could just not be. They literally legitimately could not be using an email or SMS tool, which is crazy as it sounds. I've actually seen it, fairly common. Of SEO took off and my brand's doing very well. Meta ads took off, and that's my only focus.
Yeah.
But what was mind blowing to me is the number 2 category is reviews, which at least from my perspective and like kind of the old school ecom was, you install Shopify, you run traffic, and you set up reviews as the first thing. Only 55% of stores even use a reviews tool. Think about that. Half of Shopify stores who are doing over $1 million in revenue don't have a reviews tool plugged into their website.
Does Shopify, they do have a native review solution too, right?
But they've sunset it.
Oh, okay. So what about, that is mind blowing to me. Like, I wonder if like Trustpilot, would that show up as a reviews app? Or
Trustpilot is the number 4 or 5.
Oh, it's up there. Okay. Interesting.
Yeah. So Judge.me is the number 1 player in reviews for this segment. And it's actually been astonishing to see their growth. They're at about 22,000 installs now. They grew they're growing faster than Klaviyo, which is the number 1 overall app, has about 46,000 stores, dominates the space, $1 billion in revenue. I'm sure everybody's very familiar with them. Klaviyo is growing at about 7,300 stores year over year. Judge.me is growing at 7,700. And just why that's so impressive to me is I think Judge.me is around like a 10 million ARR business. And so the amount of just raw growth that they've had has been incredible. And also last year's growth was basically growing 50%. Like they basically grew half of their entire install base in the last year, just in this insane growth. So like there are still players that are growing a lot of adoption, but the surprising thing to me, and especially just as a number 2, right? Like customer support, BNPL, what are the other categories? Influencer, loyalty, subscriptions, reviews, returns. All these other categories are smaller than that 55%. So what was really interesting to me is it's a little bit of like a cliff jump from 1 to 1 of like BNPL is the number 2 biggest category. Analytics and data are probably right there at around like 30%, which means 2/3 of stores aren't using these tools.
Right.
And so it was very surprising to me, but I also think like most e-commerce stores truly just run on like Shopify, advertising, 1 or 2 advertising platforms, and maybe email. And I think there's when we've looked at the 10 million segment as well, and I would say that's the big jump where you do see a lot more adoption of a lot more apps. But it was very surprising to me how many stores are still using very, very, very simple tech stacks, even at 1 to the majority of our report is going to be $1 to $2.5 million a year stores.
Yeah, do you like looking at your list? Yeah, the category breakdown. You've got email, SMS up at the top, reviews, customer support, buy now, pay later, like all the ones you mentioned. Like, would it be fair for someone to look at your list and go, okay, that's basically my checklist. Like, I need an email and SMS app. I need reviews. I need customer support, restock alerts, influencer / affiliate. Like, all of these seem like I can't imagine not having. I mean, you could go without a loyalty program, and some stores don't do subscriptions, so that's okay. But to not have a returns, Shopify has returns, a return solution, Magic Returns, right? They acquired.
Yeah, but I think the other thing about returns, and what I'm really fascinated about that category specifically, is one, if you think about all the categories that don't even take returns, beauty and cosmetics, food and bev, like they usually just don't even,
True.
Keep it, throw it away, or like, the Casper thing, like throw the thing away. We don't want it back because it's too expensive. Versus I think that's very much a mid-market segment.
Right.
Like when we look at the 10 million segment, it's a lot more adoption of returns. And, then it's like footwear, apparel, like the key categories, but it's much more of a concentration. Whereas like it's this interesting thing of like, it's something that like, if you run a store and you're used to it, you expect to have it, but most brands actually probably don't use it. And if you're $1 million a year store, you're probably getting, even in a high category like footwear, apparel, swimwear, you're probably only looking at 5 to 10 returns a week. Right. And so you probably don't need like a dedicated tool that you pay for that any of a team manage. Like it probably is just like someone on your support team.
Contact customer support, email.
Yeah. It's probably dropped down in a contact form.
Yeah.
And so I think that's the other interesting thing of like, I think it's 2 things. I think it's one, it's how you build your business. So like for your influencer point before, I think like it's very weird to see the shifts of like, okay, I thought before I worked at a brand that was completely influencer driven.
Yeah.
Like, it wasn't just like we had the biggest influencer in the world at the time, using it and promoting the tool, but then we had like an army of influencers below that.
Right.
And so we had a heavy investment in tech and support against that, versus we weren't spending a lot on Meta at the time. So we didn't have the tech stack and all of the infrastructure, the attribution tool and the server-side tracking. Well, that stuff didn't exist then, but today the server-side tracking tool and the influencer tracking tool and all of those other things around content creation. So I think that's another really interesting distinguisher, like how is the brand built? And then you'll see the explosion of tech stack around that, where a couple of years ago, I remember working with a couple of $1 billion brands, and they were like, didn't do any email segmentation, and they didn't do a lot. They didn't make heavy investments in email because they were doing so much stuff in other categories. And so I think that really dictates where brands invest as well. Because the most like jarring thing for me coming out of this report, like kind of the concept of like what's the checklist, is I had reviews always at the top of that checklist. Like I just assumed, it's one of the first 3 things you install. You just plug it up before you drive traffic and you get going.
Yeah.
But it seems like there is a meaningful shift away from that. And I think there will be something that plugs into that same third-party, social proof kind of, we're not just talking great about ourselves lane. I don't know
what it is, but
or what that will become. I have a couple guesses based on what I'm seeing, but I think there's like a shift that we're going to see where reviews will become will change the name of that category around how do we get other people to talk about us on our website to convince people to buy.
That's the need for social validation will always be there. It's the jobs to be done theory. The job needs to be done. The tool that does it might be different. And actually, it's funny you mentioned it because I had Klaviyo from VideoWise. Are you familiar with VideoWise?
That was going to be one of my guesses, like what replaces reviews.
Yeah, so I actually use it on one of the stores I help manage, and a lot of the stores that's literally what they're using it for is just UGC. So it's just user generated content on the product pages, and it's customers doing reviews, and so obviously it's a little bit more curated, but I think that's what everyone goes to right away in the reviews. Like I know reviews.io and Stamped, and I'm pretty sure Judge Me does this too. They support like you can upload images and videos, and that's always what I go to. Like in Amazon, I always look at the video reviews anyway. Yeah. I don't read through everything, but yeah. So I mean, that might be like video of. Well, what do you think actually? Like this, looking at this list, like if you fast forwarded 3 years from now, what is going to break into the category? What's going to shuffle in this list? And so for those listening, it's emails at the top, then reviews, customer support, buy now, pay later, restock alerts, influencer affiliate, loyalty, subscription, returns, and then analytics tools. What changes in 3 years from now?
Yeah. Okay. So I think the thing that's already changed, which blew me away the most, is the analytics data piece. I don't think we even included it in the first year of the report in 2023. This, in the 2025 version, it's 30% market adoption. It's a little bit of a hodgepodge category still, because we have things like Clarity and Hotjar and Lucky Orange, like screen recording tools, along with like attribution and server-side tracking tools like Triple Whale and Elevar. So they're not clean necessarily competitors.
Right.
But I think, if we look back to the last 3 years, that category is defined by, I lost all the data that made Facebook a magic money machine. And how do I get as much visibility back into that data as possible? Mm-hmm. And so, if we look back into the 2023 report, that category was probably like dominated by Hotjar, Google Optimize. Yeah, I honestly don't even remember any of the other players back then because it was such an important category. Yeah. And now I think you're seeing so many brands that, because they're very dependent on Meta, they're using all of these other things to fill that gap of how can I either plug more data back into Meta just so it has the data it used to have to run, or how do I get more data so that I'm more aware, I have more information, I can make those decisions that Meta used to make. I think that will only continue. I think the other piece, which will be very interesting to see how that evolves, is whether another major ad platform comes in and dominates. There was a little bit of that app loving bubble at the end of last year. Everybody's still trying to figure out TikTok. Who knows where that will go? But if there's that, if YouTube ever finally figures out how to make work for DTC brands, which I've been wrong calling that's a niche major ad platform for 6 years in a row now. I think those tools will only become even more important as how do I just have one central place where all my data is that then I can just fan it out into every tool possible. I think that's where you're seeing a lot of those data capture tools also start to integrate with the email and the SMS providers, because it's basically the same concept. Just get the consumer data from my website into every marketing tool as quickly as possible.
Yeah.
So to me, that's a big one. I think the reviews piece is a really big one. I think even from this conversation, we may even like rebrand it to social proof. Because I bet like one of the things I have seen as a same thing as you in my own shopping behavior and just on sites in general is the video. I don't know if video reviews is the proper term for it, but embedded videos on the site that are either influencers or customers talking about the product.
Yeah.
I think the one big thing that I started looking into a little bit that's shocking that it's been missing in this space is Q&A embedded on shopping.
Interesting.
Like, I think with the core Amazon experience, right? It's reviews, Q&A, how many, I think this is the other last social proof of like 500 people bought this product in the last month.
Yeah.
And so I think like we'll start to just see whether there's one app, multiple apps that kind of fill that void of what are all of the other proof points that, people like this thing. It's the equivalent of the Amazon badge or the Prime offer. So I think that will be a big shift. I think this is probably a counterintuitive hot take. I actually think customer support's not going anywhere. I actually think that it's a two horse race, very, very tight between Zendesk and Gorgeous. Zendesk has been always ahead. Gorgeous is always growing faster and just about to catch up and beat it the past 3 years. So it'll be interesting to see if Gorgeous can take kind of the Klaviyo MailChimp, where, they were able to push out the legacy SaaS, become that, everybody loves tool, or it will just be the back and forth. But I think they've already disrupted themselves. Like that's just going to become AI. And I don't know if there's necessarily going to be a new player that comes in and really like completely overtakes that market. And then I think loyalty and subscription are going to merge, and I'm not 100% sure returns will continue to be its own category. I think that's kind of my last major hot take. I think with the domination of email and SMS and how what I'll call like middle adoption or not high adoption that subscription and loyalty have, and considering they're trying to really do the same thing in two different mechanics, I think we're just going to see a convergence of what's a tool or a suite that just gets people back to my website and buy, and whether that's through incentivizing over RFM model or like the how do people actually buy and scatter model, or the habitual come back on a routine basis. To me, I think that's the last category that's going to see like a major overhaul, because it seems like it's slowed down versus where it was 5 years ago, and just doing all the players in that space, all the money that's been raised. I think we're going to see a reinvention of that model of just like, I looked at through so many brands accounts, and it's like 80% of their customers buy one time and then never come back and buy again. Yeah. And so like what's outside of just email and SMS, which I think everybody knows, like what sits either on top or around that gets, that solves that one and done problem and gets repurchase rates up. Yeah.
I'm going to jump to this because I wanted to ask one more question, but since you're on that topic, let's actually jump to this, because one of the things is you invest in e-commerce businesses too. Yep. And I wanted to ask, I get asked this all the time. I know brands, I own apps, I've invested in apps. I've never invested in an e-commerce company, but I do get a lot of e-commerce companies asking me, hey Jay, we're looking to take the next step. Who's a good investor and what do they look for? I definitely have some thoughts. I know repeat rate is probably something you look at, and you touched on that a little bit. So I thought I'd go here. Brands listening right now, and I know that not everyone's goal is to sell or get acquired or to even get any investment at all, but a lot of times it's becoming more and more the path of e-commerce is you start D2C, you build a bit of a good brand, then you break into retail, and that requires money. That requires you're starting to need to order huge amounts to get on shelves, and it costs money to get on shelves. And then that's usually where people look to raise. And what should brands be thinking about to prepare for investment to set themselves up for success if you're looking at them as a potential brand to invest in?
Oh, awesome. Okay. So big 180. All right. So,
okay. Well,
great.
Because you started on it. So I gotta.
Yeah. Okay. So a great brand to invest in. I'll do the basics, and I'll do probably what are more interesting answers. So the basics, really strong unit economics. depending on, it's a wide variety of category. So like lowest gross margin business is probably food and bev, around 40%. Highest gross margin business is, usually skincare and makeup, something like that. That's closer to 80, 90% gross margins. And then what's your CAC, what's your contribution margin? And then I think depending on where you are in your growth curve, are you profitable or not? High level benchmarks to think about, you usually want, I analyze about 50 public brands a year as well, in addition to the investments we make. The high level averages are about a 50% gross margin, a 30% contribution margin, which is your gross margin minus sales and marketing costs, and then a 10 to 15% net income margin. You also refer to this as EBITDA, but just, take your sales minus your product costs, minus your marketing and sales costs, then minus basically everything else it takes to run your business. That's your net income or your EBITDA costs. So really strong P&L, really strong balance sheet with good growth, right? If you are looking to, I guess if you're looking to exit your business, it's not as important. We do want to see growth. If you were looking for a growth round, you need to be at either very, very consistently 30 to 50% year over year, or 50% plus. If you're making the big bet that we got to invest in your business because this thing is going to the moon. The second component is just a really strong team. Regardless of whether you're looking to invest or sell, I think that this gets overlooked a lot, and especially by very, very hungry founders who can learn everything, scale a business really quickly on a very lean team. The problem is that then you become, we call it key man risk, right? If you get hit, if you want to go take a vacation, if you get hit by a bus, then the whole business kind of folds. And so really clear standard operating procedures. Who's the second in line? Most of the time, e-com businesses come down to, do you have someone in marketing? Do you have someone in operations? And do you have someone in finance? I don't mean to, deride any other role in the business, but at the end of the day, if you have those three core things humming, everything else can be figured out. And so, in exit or an investment, maybe that's, some of the reasons you need an investment. Do you have really, really just absolute killers in those three key roles that can get people into the system, get inventory into the system, and then make sure that you do have the cash to fund that whole process? And then I'd say the third basic is some sort of differentiation in the market. IP is always an awesome thing that we look for and is on our checklist in our due diligence. But let's be honest, 90% of e-commerce brands today are all buying stuff from somewhere else, could buy the same thing or something similar enough that it's honestly a pretty not that hard to enter the competition. Yeah. What about your business makes you special and you're not just the 50th clean beauty brand or the 900th yoga pants business or, very much the lookalike to everybody else? Because that needs to grow and build. I like to say that especially physical product businesses and e-commerce businesses need an asymmetric synergy, something that's actually incredibly different. And this is why I think aggregators and portfolio of brands typically actually do not work, is you need something that's actually incredibly inherently custom to your business and unique about your business. That's what makes it stand out, because 90% of this game is actually really what I call CAC hacks. How do you actually invert your marketing and sales cost structures to sell more so that your gross margins, which at a certain point will become fixed, can grow over time? I mean, I know that was a very tense amount of time. No. Now for the interesting components, where something really stands out, and I would say are the mouthwatering investments. And I think for anyone who's all right, I'm not really to sell my business, I don't want to listen anymore. The one thing I always want to hammer and why I share my content is you're the biggest investor and owner of your business. You should be thinking about how you leverage the value of the business the most, regardless of, hold it for 60 years, sell it tomorrow. It shouldn't really matter. You should be thinking about, okay, these are the same tactics that will make my business be worth more and more valuable to me as well. So really mouth-watering stuff. If you can take any of the averages in the unit economics I talked about and really blow something out of the water. So, we looked at a couple of brands the past year that had 25 to 30% net income margins. We looked at some brands that had 80 or 95% gross margins. We looked at some that were spending little to nothing on marketing. Because essentially when someone like us comes in, we raise money from our investors, which then we go deploy into companies. I always have to write a deal memo, which is how a lot of my content actually originally started, of what's called EBITDA expansion. And all that means in English for a normal person is, how is this thing going to make more profit? And so if you have one of those interesting pieces where your unit economics is what I would just say outside of an average, then that gives us room and a playground And same thing on the SaaS side of the business, SaaS business as well. That gives us room in a playground to go either, hey, marketing is insanely low. Let's go put in some paid media experts, blow out marketing. Yes, the percentages might come down, but if we can get the dollar amounts up, that solves our need, right? Because at the end of the day, it's all about the amount of dollars that you have moving through the system. So that's a really interesting one. Something that makes it truly unique. I always like to say that I don't really believe in moats anymore. I know that was a very popular term 10 years ago. To me, it's what are you doing that someone cannot or will not do? I think a lot of people and investors specifically obsess over we have intellectual property or we have this crazy way of doing something. I think really what are the most interesting businesses to me now are just like, one, we're just willing to grind and just be in the mud and do something that candidly other people just aren't willing to do. And I think that maybe, and this is just a little bit of my take on Western business recently, but I think that's a little bit lost. Yeah. We're just literally willing to get in the mud and shovel it. The second piece is have we figured out something that is truly unique that someone can't just clone, copy, or rip off tomorrow? Yeah. It's rare. I've sometimes seen it, but those are also very compelling. And I'd say the third thing of what makes it really compelling and really interesting, something that you should think about is especially in a consumer brand, something that is high recurring. I think it's really hard to actually do that. I've looked through so many accounts, and just so everybody knows, because I feel like this is a little bit of the locker room situation of what does everyone else's look like. Most brands' repurchase rates, if they're in that 6 to 8 figures and growing, is usually around 10 to 15%. And what repurchase rate is, because it's a little bit different than what Shopify shows you in the dashboard, is when I acquire a customer, what percentage out of the 100 customers that I acquire actually come back to buy a second time? Shopify most of the time shows you actually what is the percentage of revenue that comes from returning customers, which is helpful to know, but is not the same thing. Right. Why that's super important is because at the end of the day, I don't want to continue to spend money to acquire customers. There has to be a day and a time frame where the continued investment just does not make sense, and we can get into the deep economic theory of why that is true. And so essentially what we all want to see is, can we turn down or eventually turn off the marketing lever? And there's enough customers at enough profit, which is why investors love SaaS businesses, because you have that built in, that people can come back and continue to buy. I think we all got a little too obsessed with the subscription business mechanics of that 5 years ago. Everybody's like, you have to have a subscription business because that's the only way customers come back, and that's the best way to increase your valuation. What I've actually seen a lot of the brands have the most success is if the business model naturally makes sense, they will invest in a subscription program, or they figured out a different mechanic to their business, whether it's more frequent product drops, whether it's a really well thought out loyalty program, whether it's 1,500 other things you could possibly do. But do you just have that built in to wrap up where we started? Do you have that built in where you can just continually print profits, and you can eventually increase your overall net profit by reducing essentially your cost to get someone to buy? Yeah,
I love it. So first of all, is there a number that you think is a healthy repeat order rate?
It's a great question. So this is one of the biggest and probably most annoying. If it depends. Right, because if your brand is growing vertical and you're growing 100% year over year,
you're going to have naturally less.
You should. I mean, it's great if you actually can have a higher repurchase rate, but you actually probably will naturally, because you're acquiring a ton of customers to grow that quickly. Right. You probably will have a lower repurchase rate. Yeah. The really annoying part about this answer is also I don't want to see it be too high. Right. If you have an 80 or a 90% repurchase rate,
you're not acquiring enough new.
You're probably not, or maybe that's a good opportunity. Maybe that's one of those things I mentioned before. It's so out of the average that it's a good opportunity for us to come in, throw on the gas on acquisition, and then grow more. But usually, when a brand's that high, you're kind of in the coasting to sunsetting phase of a business, right? And so, target range, I would say, is just generally higher than 10%, lower than 40, 50%. It will greatly fluctuate, though, based on the strategy of your business, based on the life cycle and stage of your business. If it gets below 10, 15%, I'm very concerned. And if it gets above 50%, I'm very concerned in one direction or the other. But I wouldn't say it's not you should shoot for 2 or 3% conversion rate. It's a huge fluctuation based on also what your business is, right? If you sell a car or mattresses or, one-time massive high-ticket items that someone shouldn't be, if you sell the product well, they shouldn't be repurchasing frequently. You should also take that into consideration versus, if you're a consumable where someone could be coming back every month, that's a huge important thing to keep in mind as well.
Yeah. Do you care if a store, pick any, whatever, if they're doing 40% repurchases, let's just say they have 40% of their customers are subscribers, or do you, if, let's say they have a 40% repurchase rate, they're not subscribers, they're not even using a subscription app, but they have a 40% repurchase rate. Do you look at that differently, or do you say 40% repurchase is 40% repurchase? Like, as long as the numbers show, and if that's been maybe consistent for the last 6 months, it's not a spike. Does that matter? Or
Yeah, I would say it does. And we do look at it differently. Once you introduce, if you're truly at 40% subscriptions, which is astonishing, like, good on you. That's a very, very high percent. Yes. Yeah, that's a great subscription. You're almost probably a subscription business at that point.
Yeah.
Then we're going to go and tear up all of your subscription metrics. What's your LTV? How long do people stay subscribed? What's your churn rate? How often do people pause? And then almost our entire analysis and valuation of your business becomes around that. Because I do think that there is a component of you have a little bit more of locked in revenue. It's very rare that someone signs up for like an annual subscription in D2C, for example. But if you can get people to consistently say 6 to 12 months. Now, what I will say on the other side, where I probably have a little bit of a contrarian view here, is I look at the same business and go, well, can we just sell them 6 months worth of stuff in a bundle up front for the same value? Because the one challenge that I think our entire ecosystem over rotated the last 5 years is in that LTV to CAC equation that everybody loves. You need to have the cash flow to get from your CAC costs to when you actually get paid back. Like, right, if you're waiting 6 months to get paid back on what you originally put in on a physical product, it's tougher. And so I like to think about that a little bit differently, because the one thing to your question that I think is super important to look at, but you can't look at anything in a vacuum, is what's their CAC, right? For that 40% loyalty or 40% repurchase versus 40% subscription. Is it the same? Because if it's the same, then it's a way different calculation, and good on the subscription brand, because it's honestly impressive and you're probably getting repaid much faster. But if it's not, and you have a way higher CAC on the subscription brand, then we really then need to look at what your cash flow situation is and how long can we eat the cash flow to get to that place, because you're almost starting to get into retail payment timelines right now. We're putting cash out to buy inventory 9 months before we're actually getting paid back again. And I think too few brand owners obsess and optimize around, like, the cash flow part is actually what we spend most of our, and most institutional investors spend their time on. Because if you can solve the cash flow problem, everything else solves itself.
You're almost always going to see higher CAC for a subscription. And I mean, we do with like customers using our subscription tool it takes more to get someone to click subscribe than to buy it one time. It's a commitment. So there's inherently higher customer acquisition costs versus buying something one time. But then if you can figure out how to get them to reorder, that your CAC is, I would be willing to bet, almost always lower on a store that is selling something one time, but they have a 40% reorder rate, versus a store that doesn't have a reorder rate necessarily, but it's a 40% subscription. Like, it's going to be higher CAC almost every time on that.
Yeah. Well, because the brands also convince themselves that they can spend the higher CAC because they have the LTV on the back end.
Exactly. So yeah, there's that too. So what are some mistakes? So for listeners saying like what are mistakes and pitfalls you've seen brands get into where they've done stuff wrong, and you've maybe looked at their business or their operations or their books and finances or something, and like something that comes to mind for me is, if I was investing in an e-commerce company and if like 100% of their traffic came from Facebook and Instagram ads or something, that would be like, I feel like a red flag for me, because sometimes ads can change how you can acquire. If all of a sudden tomorrow Temu is spending another 100 billion on ads and you can't acquire customers for the same amount anymore, so like, what are some red flags you look at that brands can think about to avoid, to not be in that situation?
Yeah. So I think that channel diversity is a great one, and one that we look at a lot. I think it's not only from the marketing perspective, but also from the sales channel perspective. 90% of our revenue comes from a meta Shopify funnel. And it's like, if one thing breaks in that funnel, our business is dead, or 90% of our, 80% of our business is Amazon and they could shut the lights off tomorrow. We see both of those are very common. I put that in bucket one. Bucket two on the financial side, two different pieces, kind of the same thing. Either using way too many MCAs, merchant cash advances. This is like Shopify Capital Loan, where they don't, like, a brand doesn't really understand that they're not getting debt that they can repay over time. They're getting remitted, which absolutely just sucks all the cash out of their business. And that actually has a little bit of like a good opportunity for us to come in and step in and help them like refactor that. Because we can give them the proper debt vehicles that, you're not paying, where it essentially annualizes out to like 40 or 80% interest rates on these short-term payback loans. But really, like, not having good cash flow in the business, which I know is the most boring and uninteresting topic. And when I worked at e-com brands originally, I hated it.
But it's the most important.
It is truly the most important, and really understanding payment terms with their suppliers. I will say, I cannot tell you how many people have come to us asking for money, and I'm like, what are your payment terms with your suppliers? And everybody goes, what do you mean? And I go, we can take half your business today, or you can go renegotiate and ask for 15, 30, 60, 90 days of your supplier, grow twice as fast, and own the rest of your business. And, and I always love negotiating against myself for some reason. That's the first thing I'm going to do when I buy your business also.
Well, and the fact that if they didn't even consider that, then maybe that's a red flag too, right? Like,
yeah, well, it's one of those opportunities for us where we can step in and be of value as well, to help them through those negotiations and figure out, because the earlier you are, those are hard negotiations. Like, if you're not one of your supplier's largest businesses, they aren't going to be as willing to play ball. But sometimes, in some cases, and this goes back to this, that unit economics are so important. Sometimes we'll even offer to pay the supplier more to get longer terms. We're going to pay you 2 or 3% of our gross margin back to get 15, 60, 90 days. And that's actually what grows your business the fastest. And that's the most key important part on the financial side. I mean, I think MCAs, the reason why MCAs are kind of the symptom of, I don't really have great cash flows. So I get into these death cycles. By using MCA, it strips all the cash out of my business. I then need to figure out how to do that all over again and again and again. And it's just this brutal merry-go-round.
Do you think it's too easy for merchants to access that?
Yes, I absolutely. I had this whole rant. I don't know how anti-Shopify everyone to get. I had this whole rant that I think actually Shopify Capital will be like the embarrassing black mark product on Shopify's legacy. They have over $1.2 billion in outstanding loans to existing merchants around this. Yeah. And I'll give them credit. It has gotten better from what it was when they launched it, I don't know, 6-7 years ago. But I cannot tell you how many brands I've seen that just like get themselves into a death spiral because, I'm remitting out whatever it is, 17% of my daily sales. I've got to pay for my team and I got to make this big, huge inventory load in. And I can't, I'm just stuck in this death cycle. I'm going to start discounting and aggressively running meta ads so I can get the cash to pay back the loan. And I got no profits to do anything else with.
What if they made a app that was a investment analyzer app that if you as a brand were interested in investment, you could install this app and it analyzed everything that an investor cares about. So I install it, it analyzes, it basically gives me like an investor dashboard that now you agree to it because you're a store, you're installing it. But now there's 50 investors, like, you being one of them and 50 others who the store, I agree to install this app. I agree to have it push, and maybe it keeps some, PII, private information separate, but like it shows the core metrics. And then I could get a notification in my Shopify or in the app somewhere saying that, because Ventures has expressed interest, almost like a matchmaker thing. And you might only care about certain metrics and another investor might care about something. Some people invest in beauty, some people invest in food, some people invest in pet supplies, whatever. But basically it was like maybe something like that would be. Do you get the vision of what I'm seeing, or did I explain that well? But like, I feel like
from 2019, I actually have a PRD for exactly this. Like literally I had the exact same thought of like, could you just tap in, share some basic information, investors put in their criteria, you sync your Shopify store, and then you get the information.
And every investor is under an NDA. So you agree that like by installing this app, you agree to share information with this group of investors for the purpose of expressing interest in investment or something like that.
Exactly. And then you can, I even looked into the like in the US, the SEC laws around like, because you're technically you're starting to move into being a broker at that point. So you can facilitate intros. That's fine. You just can't run the deal because you need to have certain licenses and certifications for that. The largest challenge is actually most of what we actually look at comes out of QuickBooks, not Shopify. Because so much of the P&L doesn't actually live in
cost information. Good point.
It's it would be impossible. I could look at your top line, as a brand wants to send me their top line metrics and what they're selling in their category. It would be interesting to like start a conversation. But the first thing I'm going to ask, the first thing we always do ask when we don't get the information is what's your earnings for the past 12 months. And that Shopify hasn't eaten enough of the entire stack yet to have that data in the platform. And then the other part of that is also, I think Shopify Capital killed that concept because they did exactly the same thing.
It would be competing against it.
All of the other data will just basically flow you a crazy, that's an unfair way to phrase it. We're going to float you a high fee loan that's very easy for you. And I honestly think because I was really like at the time Shopify Capital started taking off, I was like, okay, but this idea is probably not going to pan out for me. It just made it too easy for merchants to get the capital, I think. Like for us, you're going to go through at fastest, like a 6-week cycle. We're going to do a bunch of due diligence. We're going to ask you a bunch of questions. We're going to look through your business and then you're going to get the capital. Shopify sends you an email, you click a button, they already have all your information. And then the money's in your account later that day, the next day, or like within a week.
Yeah.
I think it's just like, I hope brands learn that that's not the right path for them.
Yeah.
But I think Shopify just made it way too easy to get the money. And merchants like, well, it's a loan, nobody controls my business. I don't have to sign covenants and all the other things that make, other types of debt scary. But yes, I love the idea. I would love to see it or make my life on our side as well. Like, I think AI is perfect for this. I have a couple criteria. This is what's important to us. Go find me all the potential deals we could look at.
Yeah.
Then I have an inbox that we can go meet people. I'm sure
at bare minimum, it could get you the first step. It could show that like there's potential here, but then you still need to do your deeper analysis and their financial software. But it could maybe indicate, okay, here's a segment that could be interesting, and you express interest, and then you do a little bit more diligence in QuickBooks or NetSuite or whatever they're using. So I don't know. It's definitely interesting.
So the top Shopify act for it comes because we pay data providers to get this data. Like I always try to like the whole content of my brand is that we do so much research for everything we do that I try to put the interesting and non stuff I didn't sign NDAs for in the public. Like we pay all these data providers to see who is growing very quickly and who is expanding into new channels and who does have, the signals that we would find to be successful in it so that we can that helps us determine our strategy and thesis and who we talk to. And like that, it's a huge business that like a lot of people pay for is these like data providers to understand where things are moving. It's where a lot of like the big VC and firms use as well for their checks as well. Yeah, it's a big business. You just got to figure out the mechanism to get enough brands to opt into it.
Yeah.
And I think the difference now is, there are 100,000 stores that are around 1 million, which I would say is like that starting point for these conversations. Whereas, when I looked at it 5 years ago, it was probably like probably not that, right? 2,000 to 5,000.
Yeah.
You got a side hustle you're going to start pretty soon?
Hey man, always looking for something. No, things are good at Bold and definitely not, but I think it would be valuable for, I don't know, maybe there's something there. There's so many, there's companies that are investment firms that are doing this little bit of a, like, I don't want to call it a roll-up strategy, but like aggregate, like, acquiring stores that look the same and having an efficiency of costs in their marketing and all their other teams and applying it to it. And it just, maybe it's done already. Like maybe this exists, but just not en masse, but more one-to-one with some of these. So I don't know.
Yeah. The good part of your insight is that we all keep this stuff close to our own chest. Like what we do with like our system, I think what you're referring to, which I think did work pretty well for them when they launched it, was Open Store had basically like a free valuation kit, and you just synced some things in, pumped a bunch of data, and they were, back then I think they were sending out offers like within a day. Right. But I think there's something more interesting of like the marketplace of, hey, I can express interest in selling my business here. at a high level, when we start the process with brands or anybody, it's called a SIM. Basically, it's just a very high level piece of information. Here's the summary of our business. It's usually a slide deck or a couple of pages of notes. It's all the key information that we would need to decide if we're interested or not. And I think you absolutely could, if you could get the brand to buy, and you could absolutely recreate that, where you could anonymize it, 8-figure pet brand, like all these, the advisors and the brokers love to come up with like Project Swayze or Project Hardwood, and it's like some home goods business that sells like tables or something. And so you definitely could like recreate that. Yeah, the problem is you're just going to disintermediate this massive, very, very, you make a lot of money in the advisory and the broker business. Yeah. So you're definitely disrupt some people if you want to pursue that idea.
Yeah. Well, I think I got maybe a quarter of the way through my list of questions, but I knew it would go this way because I knew we'd get on to something, and your insights would take up more time than I thought, which is amazing. But I don't want to go too far over. I do want to go and end on, there's so much happening right now with AI and e-commerce. I think just yesterday the internet was kind of going crazy about ChatGPT's new ability. Well, there's some ability to add checkout prompts potentially with Shopify, and we're seeing, will agentic commerce become a thing? Just so much happening right now. Like, what are some, I used to ask people this a couple of years ago on podcasts, and it was, commerce is going to be all in the metaverse. That was a few years ago, and it changes every couple of years. I think now that it's a little bit safer making some of the bets on AI than maybe the metaverse was in, when was that? 22, when that was kind of the 21, and everyone thought e-commerce was going all meta. When then it was all NFTs and everything was going to be all digital, and then that kind of changed. So anyways, where do you see commerce going in the next 3 to 5 years? What are some big things you think are going to change?
Yeah. Let's keep this point straight to the point because I know I talk a lot. I think AI is going to be massively helpful at just surfacing information that people don't want to search for anymore. And that could be on-site or off-site. I think just feeding in, I want to type the information I want. I don't want to scroll up and down a page. I don't want to click through a bunch of links, especially with Coco AI. That's what we find a lot of the end consumers use for our brands, is they're asking questions that can't only live in FAQs and on product pages, like deep in a website. And I want to quickly surface it, really, really convenient, click through and go and buy. I think that's good. Like that as a thread and a trend will invade just every part of the stack and every part of the experience.
Okay, I completely forgot to get into Coco AI. Tell me about Coco AI really quick, because that was the main one of the things, man. See, we're gonna have to do a part B of this episode. Coco AI, your latest investment, the reason we didn't do this podcast a month ago, you were finishing that. What is it and what does it do, and why were you so interested in it?
Yeah, it's basically Klaviyo for WhatsApp. So automations, campaigns, WhatsApp marketing, and then what really drew me to that brand, specifically why you acquired it, is there's an AI sales agent on the back end. So we've trained AI based on source data to, somebody asks a question and somebody responds to a campaign or an automation. We can then respond, the AI can take over and respond for a brand. It doesn't need to go to a support ticket. It doesn't need to go to a human, and help drive that sale in real time.
Amazing. So it's basically it's a shopping assistant?
Exactly. On top of WhatsApp. So you have a shopping assistant that can also send marketing messages out.
But it's initiated through a marketing message. So it's not
exactly
while they're shopping. It's the initiation is Jeremy, there's this sale or there's something, and then you ask a question, find something else, but it starts with an initial engagement, like a marketing campaign of some sort, whether that, is it everything like abandoned carts, win backs, like the whole spectrum,
campaigns. But
interesting, but specific. How do you know, does someone, I use WhatsApp, but I have to admittedly say I'm not a huge WhatsApp user. I do use it, but can you message anyone on WhatsApp? Like, as long as they have the app installed, because the account,
they have to give their phone number. So it's the easiest way to describe it is the same way that North Americans use SMS, Europeans and Australians use WhatsApp.
Gotcha. So it's just phone number based, because like a lot of times I'll scan someone's QR code or we share. I don't add them by phone number specifically, but there is always a phone number associated to a WhatsApp account.
Yes, correct. Yeah, you have to use a phone number when you sign up.
Gotcha. Okay. Okay. So could I use Coco AI where I've got people to opt into SMS and I have 10,000 people subscribed by phone number? Can I now send it to a WhatsApp push notification instead? Or do I have to explicitly get them to opt into a WhatsApp message?
Depending where you are in the world, we recommend that you get everybody to opt in, for GDPR compliance and all those other things. If you have double opt-in through an active SMS, you can import phone numbers into a WhatsApp list.
Gotcha. Okay. And I saw you post the other day on LinkedIn, like you're seeing incredible results with this. Like what was that you just did some campaign test and your conversion? I don't have it in front of me, but it was just a couple of days ago you posted this.
So brands on our platform typically, especially from abandoned cart automation, see about 20 to 40x ROI. It's all the same similar patterns as SMS was 5 years ago. Very early channel, 80 to 90% open rates, very high reactive channel, summary information. I get something, I see it, I click through. And you also get the push notification from WhatsApp on their home screen. So that's very easy to activate. And
do you recommend people use an SMS tool and a WhatsApp tool? Because some people use SMS, some people use WhatsApp, or are you seeing this very regional? Like in certain countries, it's just all WhatsApp, in other countries, it's all SMS, for example.
Mostly regional. So if you're in North America, definitely recommend you stick on SMS. If you're in Europe, APAC, Australia, or the Middle East, definitely WhatsApp. And then we are finding some of our brands actually coordinated where they use both.
Okay, interesting. Awesome. I'm going to put some links to the show. Where can people go to learn more about that?
Yeah. So my-coco.ai, or if you follow me on LinkedIn, Jeremy, Horowitz, all the links are in my profile.
I will make sure to add all of that. And I definitely highly encourage everyone listening to follow Jeremy. You're one of my favorite people I follow on LinkedIn. So, and you respond to everyone who makes a comment on your post, which
I do my best.
Yeah. That's awesome. Jeremy, thank you so much. I know we went over time. This has been extremely insightful. I really appreciate you sharing your time and your insights, and would love to have you on again sometime in the future to catch up. Thank you so much.
Yeah. Likewise, appreciate it, Jay.